Hey everybody, welcome back to the channel. We are back on another episode of Daily Palantir, and we've got a decent amount of things to discuss today on the show. Now, I know we haven't had the show for the past couple weeks. Quite frankly, traveling, holidays, spending time with family, just got a little too busy to get into the show. There's been more than enough news to discuss every single day. It's just the actual ability to put out a video every single day has not really been that easy over the past couple weeks. Especially I had my mom's birthday, we had Christmas, so we just had a lot of stuff going on. Getting back into the new year, Daily Palantir should actually be daily, at least 4 times a week. Usually we don't do an episode on Friday because we have the Palantir Weekly. But Monday through Thursday, I am sure that the world of Palantir is not going to be slowing down in terms of the news updates that we have to discuss. So likely we're coming back every single day, Monday through Thursday in the new year. On top of that, the newsletter, dailypalantir.substack.com. You can subscribe to that for free. I know a lot of people have been asking, hey, when is that newsletter coming back? Kind of the same thing here. When I went to India in October and I came back, it's just been very difficult to get into the zone of writing a newsletter every single day. So that newsletter will make its return January as well in 2025. And we're back on the grind with updates every single day about Palantir. Now, if you follow the market open, market close, you've been getting a decent amount of Palantir content from the channel because we talk about it every single day, twice a day on the live streams. But the actual Daily Palantir episode will be coming back in January. What is today's episode about? This is an episode I've been meaning to do for about a week now, and this episode primarily is going to be on the UBS $80 price target equity report that we got last week. This is one of the best reports I've ever seen. It is a top-notch quality analyst sell-side report from UBS. You got to give them credit in terms of how they did the research and due diligence to actually come up with this analysis. And it's one of the best equity reports I've seen on Palantir in my entire life. And given I've read most of them over the past 4 years, this one's up there as one of the best ones. So this entire episode is going to be dedicated to breaking down their price target, breaking down their analysis, breaking down how they think about valuation, how they think about the long-term potential of the company. And that's pretty much it. Tomorrow's episode on Tuesday is going to be my 2024 Palantir Greatest Moments episode. So that'll be a fun episode. We're going to go through about 5 to 8 different really good moments in the year of 2024 for Palantir and do a bit of predictions on what I expect for 2025 going forward. Now, there's been a ton of things that have happened as well over the past week, particularly last Sunday. I made a video on Twitter, just a quick 6-minute video and put it out there. But I'll be going over it in depth in regards to Palantir, SpaceX, Anduril, Elon Musk following Palantir, Doge connections. So throughout the next couple of days, you're going to get more updates on some of the things that have been happening in the month of December on Daily Palantir. And we'll put that out. But today's episode is going to be primarily about this UBS $80 price target. Tomorrow will be a 2024 kind of recap on the greatest hits of Palantir in 2024, the greatest moments that have happened for the company. And then we'll be on to 2025 starting Wednesday. And we'll be continuing the 5th year of a journey of a company that might just end up being the most important company in the world. Let's get into it. This is the UBS $80 price target for Palantir. Again, one of the best reports I have ever read on Palantir, particularly because UBS took the time to analyze and interview the customers that are using the platform. They actually talk to the users, which I think is just so important. So let's get through it, go deeper, and kind of see what we can make from this equity report. So let's start off with their first couple of paragraphs. We are launching coverage of Palantir shares with a neutral rating, an $80 price target, 2025-2026 estimates that are well above the street consensus, and a very positive view of the fundamentals. We root our views in conversations with 17 large Palantir customers and other checks and offer their unvarnished feedback in this report, which focuses more than we normally would on the core what exactly does Palantir do question, in addition to unpacking the uplift from its AI data exposure. So already you can see the report says, hey, we spent a lot of time talking to people that use this thing. And that's what gives us confidence to give it an $80 price target versus just doing a DCF model, looking at a spreadsheet, and then trying to come up with some type of numerical evaluation of the company. The main thing keeping us on the sidelines is valuation, which at 49 times revenues and 125 times free cash flow on 2025 estimates was simply too tough to get over. So notice what's very important about this. UBS is saying, hey, we like it, $80. That's our price target. But they are not saying their clients should buy it. And that's the difference right here. The difference in terms of this equity report from a lot of the other ones is that they're not issuing a buy. They're issuing a kind of neutral rating. But they are so impressed with the company, so impressed with the fundamentals, that they're willing to give Palantir an $80 price target, which last time I checked from all the bears, $80 was this crazy market cap, $185 billion. I'm not saying that market cap is not crazy. I'm not saying it's not obviously extended. But UBS is like, no, we can get along with that valuation. We wouldn't say to buy at 75 for $5 of upside, but we do think that eventually this stock is worth $80, even if it has a little bit of a pullback. And we do think it can get to a $200 billion market cap, which is basically what we're at right now, based on further growth, because of how strong the fundamentals are. So although they're not saying buy, they are saying they believe the stock makes sense in regards to the fundamentals. Just a question of getting over the valuation. So what do they say about fundamentals? Our review of Palantir's fundamentals left us very positive. Customers and other checks were almost all bullish on Palantir's model and the value they were getting from Foundry and AIP in particular, with some pushback on premium pricing and lock-in. Unlocking the value of private data sets is key to realizing AI as well as traditional optimization benefits, and Palantir is very well positioned here. The AIP on Foundry platform enables the do-it-yourself AI trend, which in our judgment is likely to persist, and Palantir can see further growth and upside as it helps customers find additional value and high-end use cases for AIP on Foundry outside of its power alley of supply chain optimization use cases. We're launching with our 2025-2026 revenue growth estimates of 28% and 25% above the street consensus, and see potential upside to even these estimates. So this is another really thing that's important. Number one, they're saying, hey, AIP and Foundry makes a lot of sense as a data platform, as an operating system for your business, and we think that's going to go far into the future. Number two, they're only assuming 28% revenue in 2025. And then they're only assuming 25% revenue in 2026. I'm assuming 40% revenue in 2025. I hope we get there. I don't know if that'll happen, but my base case is like 32 to 35%. And then 2026, I think we should go consistent with around 35 to 40%. Like, I think the next couple of years of growth should be monumental for Palantir. I am not assuming 28 or 25% in my models, which is a really interesting sort of conundrum here. UBS says it's worth $80 with substantially higher growth estimates than the rest of the street, but still lower than 30% for the next 2 years. I'm saying we should be at 35 to 40%, which will it happen? I don't know, but I really do think this is just beginning. Has the stock, has the valuation gotten up there? Yes. So maybe, that is something that is not quote unquote just beginning, but the actual growth of the business, I think, is just beginning. And as a result, I think the stock theoretically could just be beginning, because the premium is just going to get more exciting for people if Palantir can actually grow at 35, 40%. So one thing that's very important from this equity report is that this is really a fundamental driven equity report. It's not a valuation driven equity report, because they're assuming not the best growth rates for the next 2 years. I mean, 28 and 25 is nothing to poo-poo at, but I'm expecting 35 to 40. And so if they're expecting lower growth rates than most of the street and still getting to $80, that means they believe the fundamentals of Palantir simply justify a higher multiple. Valuation is hard to overcome. While we have certainly understand that valuation isn't straightforward for stocks that are well positioned into large tech paradigm shifts, in this case for AI and data, that are accelerating, and for which an improving narrative can make the revenues and free cash flow multiples less important, in our view, Palantir deserves a material multiple premium. I read that phrase last week, and it gets juicier every time I read it from an institutional analyst. In our view, Palantir deserves a material multiple premium to most/all other public software firms. That said, 49 times revenue and 124 times free cash flow in 2025 estimates was simply too high of a hurdle to get over, and we don't mind staying patient for a better entry point. So basically, they're like, look, it's expensive. We think it'll get cheaper at some point. But the fact that they're saying Palantir, this little black box company that a bunch of YouTubers and people on Twitter have been talking about for the past 4 years now, when really no one cared about it, that same company deserves a material multiple premium to all the other software companies that are out there, the Datadogs, the Snowflakes, etc. I mean, just seeing that, it was just kind of cool, right? Because we haven't heard, outside of Dan Ives and Mariana that have been bullish for a long time, we haven't seen an institutional analyst actually say that. And so they're acknowledging valuation is tough to get over, but they're not denying the value of the technology, the value of the culture, the value of leadership. All that stuff ultimately leads to a substantially stronger premium that, in their mind, Palantir deserves to their software peers. Okay, so the rest of the report is a lot more number stuff, and they talk about Palantir's government business, if they can grow 30%, yada yada. So like those are important things, and they're relevant. But what really matters right here is what they said about their customers. And this is what I want to get into in this video, because everything else, we talk about all the time in regards to growth rates and numbers. But this is the part that I think matters the most, because they actually got to speak to the people that are using the software. So let's start off here with customer number 5 to get started on all of this analysis. Palantir is one of our major technology partners. Really, all of the data that we capture from our customers, all of our vehicles, all of that flows through Palantir Foundry. We're a big Foundry customer today, and that's really all we're using at the moment. Our bread and butter use cases for Palantir are on the supply chain side, where we're doing predictive analytics, a lot of analytics work around production and manufacturing, orchestrating all of our inventory, making sure we're maximizing production per shift, etc. During COVID, Palantir was a huge success for us in orchestrating our supply chain in real time, all the workloads to get access to semiconductors for our vehicles, all of that we did through Palantir. We're actually now also looking at Palantir to help drive our intelligence engine around used cars, pricing when we buy back those cars from customers, which used cars sell the best, and things like that. Our Palantir runs entirely in the cloud. We run it on AWS. So right there, you're seeing a lot more analysis in terms of one use case, particularly around supply chain optimization, that is now filtering itself through other use cases, in this case, used car data intelligence, for those companies to make better decisions. In terms of incremental use cases, we actually are in the early stages of adopting their digital twin offering. It's going to help us optimize our real estate and manufacturing footprints by helping us create this end-to-end view entirely in Palantir. So that's the biggest incremental use case for us on Palantir. Digital twins is a big area where we're comfortable investing because we're fairly comfortable and we'll be able to generate enough return on that in the near future. Customer 2, in terms of our IT budget growth year over year, just at a high level, we're being held to around 3% of sales. So that gives you a sense of our size, just shy of $1 billion of IT spend. So our trajectory for both 2024 and 2025 is pretty flattish on a year over year basis with some room for growth in select areas. We're very much focused on investing in areas that we have not gone to turn around and cut later. We're really trying to change their approach of how we buy and build data platforms. That's where Palantir comes in. We're trying to break down this process of adding purpose-built software, aka shit that works, this is what Karp talks about, that's designed for a specific use case and build data platforms and data models that can really be used for anything going forward. So kind of the same argument Karp has talked about in the past of like transformational software that works for one use case. And once it works for one use case, as this customer says, they can then expand it to other use cases. But getting that first use case through the door is very important. This is a very long one, so we're going to skip some of the other stuff that they said. Here's what customer 3 said. Our cloud migration onto Palantir was quite difficult, but we are somewhat of a unique case. When we began our migration into Palantir in the cloud, Palantir was only available on AWS. They were the only public cloud provider you could use. That didn't work for us. We could only use Azure and GCP, obviously. We asked Palantir to engineer a solution for Google, and they did, so that was our opportunity. We were the first company to be running Palantir fully in the cloud on GCP. So interesting. So it looks like this customer actually is the reason why Palantir now is agnostic on the hyperscalers. I'm curious which company this is. Who is the first company to use Palantir on GCP? We got to do some digging on that. I definitely want to try to figure out who that is. Now, it was extremely painfully obvious because we were the first customer to be running it on GCP. The platform wasn't yet optimized for GCP. Also, Foundry on-prem is different than Foundry in the cloud. It's not a simple lift and shift. You have some light refactoring that you could actually do to get the underlying applications. It definitely was not simple. We were expecting a more straightforward lift and shift, but those two factors, the differing versions and being first on GCP, made it more complicated. We had something like 5,000 users of Palantir across 7,000 applications connected to Palantir. Even just the retesting effort was massive. It took us about a year to refactor all those applications and another year to actually migrate and retest those applications. So 2 years in total to migrate to the cloud. They continue to write. For us, we do have AI and ML use cases, and to be honest, that's what drives Foundry, using Palantir to write AI models over the data. Where Palantir isn't really fitting the purpose for us yet is on the generative AI side, and that's where AIP comes into place. I think for us to go really heavy on AIP, they need to replace their approach around data lock-in, that we need to lock in all of our data in Palantir to be able to use it. Basically asking to make the ecosystem much more open. If Palantir were to make their data ecosystem more open so that you don't need to onboard all your data into Palantir and it was interoperable in and out of Palantir, that would be huge for us. I can guarantee you that we probably have our spend up 50% over the next few years, because that's really by far our biggest complaint. Palantir has been willing to step back on the data lock-in. They push heavy on the security argument. If it's not in Palantir, a lot of the data integrity and governance is lost. Very fair point by Palantir, given we saw what happened to CrowdStrike and Snowflake this year. It's true to an extent that, and the security angle is how they've won so much business of the DoD, but for an enterprise, it's just tricky. So if you saw a more open data ecosystem, that would be a major catalyst for AIP and Foundry, at least for us. So far, we have some really interesting notes from a couple of these clients. Number one, they're saying, hey, we needed Palantir to create a solution for GCP, for Google, for our engineering efforts. They did that for us because they actually work with us. And that's how we got Palantir on these different hyperscalers. Number two, you're saying from another client, look, Palantir is really awesome, but we would be spending a lot more if we didn't have to have all of our data tied into Palantir. And as an investor, it's really nice to hear the pushback from Palantir is, no, You can't do that because then your data is compromised, and we're just not going to let data become compromised. And if we're going to have to lose some money, we're going to have to lose some money, but we're not going to mess up on the data security and governance side. So I think that's very important. That's probably why Palantir definitely gets a lot more government deals. And it's kind of nice to hear that from a client in terms of how valuable they see Palantir security and governance perspective, even if it is a bit annoying for them. And one of the other things we learned is that the supply chain optimization use cases for Palantir are obviously very important. During the pandemic, Palantir played a very big role in terms of modernizing supply chains as the world flipped overnight. And it looks like these customers are pointing to that idea as well. Okay, let's move on to another big customer, which is a very important piece of analysis they gave. There's 3 paragraphs here that I wanted to read. So let's read this one because this goes deeper into the ontology. They write, our biggest Foundry use cases are around digital twins, a digital twin of our mining operation. So I'll give you a few examples. We have a mine that's about a mile deep. When they mine for copper, they tunnel under the copper deposit and use explosives on part of the ceilings to get the copper out of it. We basically set up a digital twin of this mine to figure out when these walls would move, and this improved the safety framework dramatically. Another one is modeling the toxicity level of the air. We're able to use Foundry to basically optimize the toxicity level in the air such that you can make sure you never cross a threshold that forces you to stop operations. It's a huge productivity gain. Foundry essentially is key to mapping out operations and helping us make better decisions, but at its core, we use it as a digital twin, and then it can easily be leveraged for all these other use cases. They then go on to say, Palantir really is like a black box. They come in and create these ontologies for you. They're very brilliant people. They're very bright, and they eventually wear you down to the point where you agree with their way of doing it, which I've heard from other customers before. Palantir is always the most expensive option for any given use case. Organizations have tons of data. You have heaps of data that you have so much data you don't have it cataloged. In many cases, you have like 10 copies of the same thing. Every time you do a project, you're basically replicating that data again. What Palantir does well for you is that they come in and they have one set of data. They create a golden record of your data for you, where it's basically the single source of data that you can actually trust. The ontology is probably the most critical part of Foundry. It allows you to quickly catalog what you have. If something changes, the model is instantly updated. It's hardwired into your systems. Ontology is really just your metadata layer that sits on top of all your data. What it does create is a digital twin of your underlying data into the way that you look at your business. So for us, the ontology is trucks, mining stockpiles. It's basically a data model. And again, this is what Karp has talked about for a long time, which is that none of these AI use cases in terms of chatting with a bot to be able to get some type of response from a large language model actually matters unless you have an ontological representation of your data. And I think the market has figured that out. I think customers have obviously figured that out. And the reason Palantir is re-accelerating growth to 30%, and I think closer to 35, 40% next year, is because more and more customers ultimately are going to want that ontology layer to be able to get any use case of AI. Now, here's the last one I want to read. This is, I guess you could call it a little bit more of a bearish argument from a customer, not against Palantir, the technology, but more so why they're canceling their contract. And it has to do with the openness of Palantir's platform. So here's what they said. At its core, Palantir is really a data platform. It's great for having large amounts of unrelated data stored in the same place. We inherited the Palantir platform. There was a bunch of work that went into it. I think we spent around $200 million on Palantir over the past 5 years. $40 million a year is pretty incredible. And that was mostly on the development of applications and workflows in our risk and compliance departments, primarily compliance. We went from spending nothing in 2019 to spending around $20 million in 2021, and that eventually ramped up to over $40 million a year, where we are now. However, our contract expires in mid-2026, and we'll probably look to extend that another 6 months and then move off of it entirely in 2027. It has little to do with the technology, mostly commercial reasons specific to our cost-cutting targets. So there are a couple of reasons why we aren't going for it, but ultimately the decision was escalated all the way to our CEO, and he's the one who made the final call. The two reasons were really cost and the fact that it's not an open ecosystem. So too expensive, and it's not as interoperable as the company would like. On the cost side, we're spending around $40 million per year on Palantir when we could just do the same thing on Azure for under $20 million. So I mean, that's a meaningful level of savings. So just under half. On the closed ecosystem side, we're really trying to invest as much as we can in open source, open ecosystems, because there's really no way to get everyone into a single data platform. That's where Palantir really excels. If you have all your data on Palantir, the performance and functionality of the platform is really not matched by any other data platform. When you have your data in a bunch of different locations, it's less valuable. We really view it as an all or nothing platform. And obviously, some other customers noted that they would also like an open ecosystem, but Palantir kind of did push back and say, hey, security and protecting your data and having that lock-in effect ultimately is important for governance. And so that's what determines if people are actually going to value Palantir or not, or if they're going to want a more open ecosystem from a variety of these different use cases. Final paragraph from this customer: from a raw performance standpoint, Palantir is a very good solution for a company that isn't as heterogeneous as us from a tech stack standpoint. It would be an even better solution. We really need as open as a platform as possible because we're using so many different data platforms internally. So we really lean towards reusability and open platforms with a low cost. From a feature and functionality standpoint, Palantir is a very strong platform for end users to not just developers. There's a lot of low code, no code functionality that is extremely powerful. There are things like data lineage and data security that is built into Palantir that we'd be very happy to have. It's an extremely powerful solution from that standpoint. Like I said, though, for those commercial reasons, we can't really go with Palantir. From a technical standpoint, though, it's a very strong solution. So that is the UBS report, in depth, going deeper on what we're seeing from Palantir. What are the takeaways? Number one, all of these clients are unilaterally agreeing that the tech is unmatched. And although it's a closed ecosystem, it is one of the best closed ecosystems you could imagine if all your data and all your customers and all your employees are locked into one platform. The results you can get via digital twins, the ontology layer, etc., are phenomenal. So that's good to hear. The two things that I think this report illuminated to me as an investor are, hey, there are customers out there that don't like the closed ecosystem approach. And as a result, they might end up canceling their contracts, as we saw just now, because of that. And number two, there are some customers that could spend half the cost and build it on something like Azure. And so I think for investors, it's important to understand the implications of that. Number one, is Palantir ever going to be open or closed? In my opinion, I think they're going to be closed for a long time, simply because I don't think they want to take the security risk. Is that going to propel growth? For example, they lost a customer because they were closed. What if they start gaining customers? And I'm sure they have in the past, because they are closed, right? These are kind of things and nuances we have to analyze in regards to customer feedback. And then number two, the idea of splitting the cost in half and migrating everything onto Azure is definitely attractive. The question is, how many organizations are actually going to do that? How much pain are you willing to go through if you've been using Palantir, in this case, for 5 years, to switch everything? Now, again, if you're a public company and you have to save costs, there might be certain reasons for why you have to do that. But in general, is that going to be a trend that we see? And I don't know the answer to that. Maybe we do, maybe we don't. From my understanding, this is the first customer that I've read on this report that actually is seeing the solutions Palantir can offer in a different platform like Azure for half the cost, and they're switching. If that continues to happen, that's not the best thing in the world, right? You want Palantir to be able to either lower their costs on the customer, or to be able to adapt to them in a way that closes that deal so that they don't leave. But on the other hand, this could be an isolated incident, and there's not that many customers that are willing to do that. And it's one of those things that's more isolated in regards to why this customer is going down that route. The point is, the beauty of this report is that we got to hear more from the customers. And from UBS's perspective, because they were able to hear from the customers, and again, what is the point of the report? It's not valuation, it's not the government business, it's not growth rates, it's holy crap, the tech works and it's different. Which is why UBS says we have to have a material multiple. So regardless of closed ecosystem versus open ecosystem, regardless of saving on cost by doing it on Azure, regardless on what the ontology means for an organization, regardless of the digital twin offering, this report is centered on the idea, and the $80 price target is centered on the idea that the technology is real, it's working, and it's very, very differentiated from the other software competitors. And if you've been an OG Palantir investor, you understand that ontology, even if you didn't fully understand technologically what the ontology was at its core, in 2022, if you were investing, you were able to hopefully articulate the simple sentence, which is that the ontology is a single source of truth for your business, the logic, the action, the verbs of how your business ultimately enacts in the real world. And that solution was special, and that solution was needed to build any type of meaningful transformational enterprise software. And if you listen to Steph Cohen, who is a Palantir co-founder, in his Stanford talk, he talks about this. Peter Thiel talks about this. Karp has obviously talked about this. This has been the thesis on Palantir for a long time. And it kind of feels like in 2024, the market is waking up to it, as AI has kind of been the tailwind to get everyone to start paying attention. But nonetheless, I think this UBS report is going deeper into the idea that, hey, this ontology thing, Mariana called it a juggernaut in the making, and that the idea of the ontology can be so differentiated and special in so many different use cases. I think UBS woke up and said, this ontology thing is not a joke. And because it's not a joke, and because it's very real, we probably have to have a much deeper understanding of it, and we have to have a little bit of imagination of where this ontology can go in the future. And if it can go much higher, then it does look like Palantir is going to have a lot of different use cases and a lot of different customers. We're only at 600 customers right now. I mean, Palantir should have 10,000 customers one day. We're at 600. So in terms of growth, that's why I think, the growth will be much stronger than the growth that we currently have right now. But if that growth continues based on this idea that the software actually is differentiated from the rest of the world, then maybe there's an argument where this gets very, very exciting in the context of what happens from Palantir. Final thing I'll read from the UBS report is their key takeaways. So they write this right here. The common thread in all the descriptions of Palantir above is that the model is rooted in better organizing data for customers. Several of our checks describe Palantir as an alternative to a siloed data stack, that the attraction was the ability for Palantir and Foundry in particular to serve as a federated data platform versus the customer being forced to stitch together disparate data sources. Palantir's strengths were described as being in the ontology or the data model layer, as well as the data ingestion, data analytics, data pipeline building, data cleansing, and its tight data governance or access features. In this sense, perhaps Databricks and its data lake architecture would be a relatively close peer. Data applied to real-world problems. We cover the stocks of the most incumbent public data software firms, including Oracle, MongoDB, Informatica, Confluent, and Snowflake. What struck us from these conversations was that Palantir was used not only to aggregate data, which is what most of those companies they mentioned tend to do, but to put it to use. In other words, Palantir took the next step that these data peers do not take by applying the data to real-world problems to operationalize the data. Palantir does this by custom building the ontology or data model layer, and then by working with customers, that's where the consulting narrative comes from, to identify problems or use cases and custom building applications on top of this data platform. Now, a lot of people said that consulting part of the business can never scale. Obviously, we've seen it has scaled, it is scaling, and quite frankly, what the market calls consulting, I'm calling actually giving a crap about your customers, working with them, and that's the value we're getting from Palantir. Some customers described this as Palantir codifying their business or building a digital twin of it to improve the process of utilizing their valuable corporate data to drive value. And then the report continues to talk about the different use cases they're getting from Palantir. The two pushbacks, again, lock in the closed system, we talked about that, and pricing, those are the biggest issues that some customers have had. But overall, what UBS is describing right here is a fundamentally differentiated product that has the ability to scale, that cares about their customers, that one day might have a lot more customers than they have right now, that is only assuming 28 to 25% growth over the next 2 quarters, or next 2 years, even though that is higher than the street consensus, and that ends up concluding that the data operating system that Palantir is offering to clients, the ontological understanding of how your data should drive value, not just stored in a lakehouse, but then allow you to make actual decisions so you can improve your margins, decrease your costs, and function to survive another day as a business. That stuff matters. And the question now becomes, how much will that matter over the next decade? I think it's going to matter much more than people think. I think from the government perspective, it's going to matter much more than people think. And ultimately, as the AI build out continues to happen, the use case of AI is not going to be in the GPUs. It's going to be in the value from the GPUs, which is going to be in software. And if that's the case, it does seem like Palantir is going to be one of the names that is going to be probably up there in regards to not only the brand awareness of everyone, not just investors, but customers, in terms of hitting up Palantir and saying, hey, what can you do for our business? But also in terms of the broader investing landscape, how people think and conceptualize of Palantir as a company that is able to quite literally take the market, as Alex Karp said. And in the next 10 years, Palantir is going to have the opportunity to execute and potentially take the entire market. All right, that's it for me. Thank you everybody for listening and watching. Hopefully you guys enjoyed today's show. Tomorrow, we will be back with Daily Palantir, my top 2024 moments in the world of Palantir. Looking forward to that. Thank you everybody for listening and watching. I'll see you guys on the next one.